American tariff, a global shock, regional pressure. And the market reacted cautiously. Very cautiously. The announcement of new tariffs by the United States fell like a bomb on the industrial and export sectors of several countries, including Brazil. The dollar reached 5.62 Brazilian reals throughout the day. It was frightening. In the end, it closed a little lower, 5.54 Brazilian reals. But still, a significant increase. On the stock exchange, a drop, 0.54%. And more than that, a significant drop in Embraer shares, over 3%. The reason? Simple. Embraer exports a large portion of its production to the United States. Mainly, aircraft, high-tech equipment. With the tariff hikes, these products could become more expensive, or less competitive, and that weighs on the budget. Initial calculations indicate that the impact of these tariffs could cost Brazil up to 0.5 percentage point of GDP. 0.5 point. And if we remember that Brazilian growth hovers around 2.5% per year, losing 0.5 point is no small feat. Now, an important fact. Brazil sells 3 times more to China than to the United States. But there is a fundamental difference. China buys mainly basic products, soybeans, or oil. The United States also buys value-added products, machinery, industrial components, aircraft. In other words, Brazilian industry is the one that feels the impact the most, and feels it strongly. Talking to business people, most advocate diplomacy, avoid hasty retaliation, seek dialogue. The biggest risk? A tariff war, which could not only make imports more expensive, but also accelerate the rise of the dollar. And we already know what that means. More pressure on inflation. More pressure on our pockets. By the way, speaking of inflation, June's data is out. The IPCA, interest rate of consumer price index, was lower than the previous month, but over the last 12 months, cumulative inflation was 5.35%, above the central bank's target, for the 6th month in a row. And that's why the president of the central bank will have to write another letter. Yes, explaining why he didn't meet the target. Another challenge for monetary policy and for the real lives of Brazilians. Now, just look at what's happening in the rest of the world. Because the tariff hike isn't just impacting Brazil. China, the main target of the new tariffs. Exports of technology, electronics, and industrial components, all under pressure. The Chinese response has already begun. Barriers to American products. Focus on the domestic market. And strengthening alliances with the global south. But the climate is confrontational. Germany, Europe's industrial giant, is already beginning to feel the effects. With tariffs on auto parts and industrial equipment. Manufacturers like Mercedes, BMW, and Siemens are on alert. The European Union is moving toward a joint response. Japan, high-tech exporter. Direct impact on exports to the United States. Tokyo is trying to maintain a diplomatic tone, but is already discussing technical measures in sectors like semiconductors and batteries. India may even benefit in the medium term, with companies seeking to exit China. But in the short term, it feels the effects of global instability, slower growth, and increased logistics costs. Russia, already under sanctions. It has less direct exposure to trade with the U.S., but it takes advantage of the situation to strengthen alliances. China, Iran, Latin America, and it sees the tariff hike, an opportunity to position itself as an alternative supplier. And in our region, Latin America feels it too. Let's look at the highlights. Brazil. We've already seen a rising dollar, falling stocks, pressured inflation, and industry at risk. Mexico, a strategic partner of the U.S. through the USMCA. It could attract industries from Asia. But the automotive sector is on alert. Any imbalance could be costly. Chile, an exporter of copper and other commodities. It will feel the impact if global demand falls, or if prices plummet. The Chilean economy is very sensitive to the external cycle. Argentina, inflation above 270% per year, and a volatile exchange rate. Any increase in the cost of imports is a direct blow to consumption and to political stability. Now, and given all this, the question remains, what will be the next move? Will we enter a trade war? Or will common sense prevail? The coming months will be decisive for global trade, for industry, and for our wallets. It's time to monitor closely and with great caution. We wish you a wonderful day. May your week begin with clarity, focus, and well-informed decisions. If there is any relevant change in market flows, we will inform you in advance. Stay tuned and connected with those who deliver real information. Stay tuned for the next video, and receive our sincere thanks. Our loyal audience today has become more than followers. They are true friends and brothers on this journey of times.